It feels like every headline this week,
Hmm.
from the soaring stock market to unexpected shifts in global trade, even down to like our personal finances and the legal dramas playing out. It's just, they got so many layers.
Oh, absolutely. It can feel like a full-time job just keeping track of it all, the
Oh,
sheer volume.
yeah,
It's hard to know what's just noise and what really matters.
right. And that's exactly what we want to do here in this deep dive. Cut through all that noise, pull out the key bits of insight from the sources you've shared, and, help you understand what's really going on across all these different, but often very connected events.
Yeah, we'll dig into why the stock market's hitting records, unpack what's happening with Canada and trade, and how that might actually hit your wallet.
And we'll get into crypto too, of course,
Yeah.
and regulations there. Then maybe shift a bit to how people are spending or maybe not spending and saving. And then, yeah, wrap up with some of those big legal and political stories.
And like a plan.
Okay, so let's dive right in. Markets and the economy. It's been, well, pretty remarkable, hasn't it?
Definitely.
The S&P 500, the NASDAQ,
Yeah.
new record highs again on Friday, June 27th. S&P over 6,100, NASDAQ cracking 20,000, both up like 0.5%. Even the Dow jumped, 430-something points?
Yeah, and what's really striking is the comeback, right? I mean, the S&P was down nearly 18% for the year back at its low in April.
Wow, yeah.
And now it's up almost 5% for 2025 and over 20% just since April 8th. It's quite a turnaround.
Incredible.
Yeah, you hear experts like Jim Can over at Wealth Enhancement or Charles Payne on Making Money. They're all pointing to these highs. Payne even talks about, American exceptionalism driving things.
Interesting. Is that the whole story, though, or is it really focused?
Well, that leads to the tech sector, which is undeniably a huge driver here.
Right, NVIDIA.
NVIDIA, exactly. Climbed almost 11% this week. New all-time high, $157.75.
That's just staggering.
It is. They've gained $1.42 trillion since those April lows, and they took back the crown, most valuable public company, from Microsoft.
Microsoft didn't do too badly either, though.
No, not at all. Microsoft saw strong gains, too, up about 4% for the week, 18% year-to-date. So tech is definitely leading the charge.
But does that make the market a bit vulnerable if it's so concentrated?
That's the big question, isn't it? And look at Coinbase, too. Another tech-related story, sort of. Best performer in the S&P 500 for June.
Really? Coinbase?
Yeah, up 43% this month alone. Highest level since their IPO back in 2021.
Okay, wow. So what's behind that surge? I know they got added to the S&P 500 in May, but it's 43%.
Right, that inclusion helped. But a really big factor is the Senate passing the Genius Act. That's the stablecoin framework.
Ah, okay. Reducing regulatory uncertainty.
Exactly. Suddenly, there's a clearer path forward. Analysts like Owen Lau at Oppenheimer point to Coinbase's consistent positive earnings, now with less regulatory fog,
Makes sense.
Plus, they have this really sweet deal with Circle, the USDC stablecoin people. Coinbase keeps all the revenue from USDC held on its platform, plus nearly half of other USDC revenue, and they don't even bear Circle's operating costs.
Huh. That is a good deal.
Yeah, Devin Ryan at Citizens thinks there's still a lot of potential upside for the stock because of it.
Okay, so markets are booming, tech's flying high. But let's connect that back to, people on the ground. Inflation's still the elephant in the room, right?
It is. The Fed's favorite gauge, the PCE index, it only ticked up 0.1% in May, which sounds good, right? Third straight month of low increases.
Yeah.
Seems okay.
But the core PCE, the one that strips out food and energy, that went up 2.7% year over year. And that was actually a little hotter than the 2.6% folks were expecting.
So not quite cool enough for the Fed yet.
Probably not. It likely means they'll wait on cutting interest rates, maybe until the fall, maybe longer.
Gotcha. And how are consumers feeling about all this?
It's mixed. Consumer sentiment actually improved in June, bounced back quite a bit from May. People seem a little less worried about inflation itself,
Okay.
but they are worried about the potential impact of tariffs. And we're seeing some data suggesting people are, tightening their belts a bit, watching their spending. Yeah, that makes total sense. And everyone's waiting for that jobs report next Thursday, right?
Absolutely. If that comes in weak, maybe, just maybe, a July rate cut gets put back on the table. And there are concerns about rising unemployment. Jim Cramer even mentioned how Constellation brands, they make Modelo, Corona.
Right.
Their sales are apparently being hit by Trump's immigration policy. He said Hispanic consumers are spending less, maybe fearing job losses. So you see that direct link.
Wow. Yeah. Policy impacting beer sales.
Yeah.
That's a direct ripple effect.
It really is. It shows how these big picture things filter down.
Okay, but not all company news is gloomy. Boeing got some good news.
Yeah, finally.
Yeah.
Rothschild & Co., Redburn upgraded their stock to buy, raised the price target quite a bit, up to $275.
Wow.
The analyst, Olivier Brochet, basically said, after years of troubles, things seem to be taking a more positive turn. So maybe, just maybe, they're starting to get things sorted out.
That would be huge for them. But then you have Nike.
Mhm.
Their sales forecast was better than expected, stock jumped, but tariffs are still a big problem.
$1 billion problem, according to their executives.
Yeah.
That's the extra cost they're facing from U.S. tariffs.
Oof, $1 billion.
Yeah. They plan to offset it with surgical price increases, so watch out consumers.
Uh-huh.
And they're also actively trying to make less stuff in China, move production elsewhere.
Which, again, ties back to trade policy. And that brings us nicely to the whole U.S.-Canada situation, which really blew up this week.
Blew up is right. President Trump just abruptly ended all trade talks with Canada on Friday.
Just like that,
Why?
with Canada. Why?
It was a direct response to Canada's digital services tax, the DST.
Ah, the tech tax.
Exactly. Is a 3% tax on U.S. tech giants like Amazon, Meta, Google. And the really sticky part, it's retroactive to 2022.
Ouch.
Yeah, it adds up to about $2 billion for those companies. And the first payment is due, like, now, this Monday.
So Trump called it. What'd he say?
A direct and blatant attack. And he immediately said the U.S. would announce new tariffs on Canada within 7 days. So tit for tat.
Wow. How's Canada reacting?
Officially, the Prime Minister's office says they'll continue to engage, try to negotiate, but there's pressure at home. The Business Council of Canada wants them to scrap the DST if the U.S. drops the tariff threat. Ontario's Premier, Doug Ford, also called for a pause. So they're feeling the heat internally, too.
Yeah, I bet.
Frank McKenna, the former ambassador, called Trump's move extraordinary. Just highlights the unpredictability, you know?
Totally. Okay, stepping back from just Canada, what do all these tariffs mean more broadly for supply chains, for prices, for, us?
Well, higher prices, definitely. We're seeing estimates of 8 to 15% more on apparel, consumer goods, maybe 6 to 10% on footwear.
Like the Nike situation.
Exactly. And beyond prices, supply chains are adjusting. Companies are holding less inventory, now maybe 3 months worth instead of 6 like before.
Trying to be more nimble or just nervous.
Probably a bit of both. And you see those empty shipping containers at ports? It suggests importers aren't banking on a big peak season. They're being cautious.
Which states get hit hardest by this kind of thing?
States really reliant on trade. Think Kentucky, about half its GDP is tied to trade. Or California, massive trade volume, nearly a quarter of it with China last year. They're definitely more exposed.
And Trump's other tariff deadlines, like the ones for the EU in July, are those definitely happening?
Well, the White House called them not critical, suggesting maybe some wiggle room. But then Trump himself said, we can do whatever we want about the dates. So who knows? More uncertainty.
Always uncertainty. Is there any upside, though? Any companies reacting differently?
Actually, yeah. It's interesting. Some foreign companies are now thinking about building plants in the U.S. to get around the tariffs.
Oh, really? Like who?
Like Windrose Technology, a Chinese electric truck maker. They're reportedly looking at sites in Georgia, Arizona, or California. They see the U.S. market as too important to ignore, even with the trade friction.
Huh. That's an interesting twist. Setting up shop here to avoid the tariffs on goods made elsewhere.
Exactly, a potential long-term shift in manufacturing.
Okay, let's shift gears again. Let's talk policy. Specifically this One Big Beautiful Bill Act from the Trump administration. Lots in there, starting with Medicaid.
Yeah, big changes proposed. Some cuts got blocked by the Senate parliamentarian stuff, like caps on state provider taxes, making some immigrants ineligible.
Okay, so some limits.
Right. But other things didn't get blocked, like new work requirements, 80 hours a month, and people having to prove eligibility more often every 6 months.
That sounds like it could impact a lot of people.
Oh, definitely. The CBO, that the Congressional Budget Office, estimates just the provider tax changes could cause 400,000 people to lose Medicaid coverage.
Wow, 400,000, okay. And what about AI? There's something controversial in there about AI regulation.
Very controversial. There's a provision that would basically make it illegal for states to pass any laws regulating AI models or systems.
So federal government says hands off to the states on AI.
Pretty much. Total preemption. And that's drawn fire from both sides, Republicans and Democrats, worried about federal overreach, gutting potential safeguards. It really asks, who should regulate AI?
Yeah, big question. And student loans. Changes to the Public Service Loan Forgiveness Program.
Yeah, they're looking to narrow the definition of a public servant who qualifies,
How so?
specifically targeting organizations involved in activities with, quote, a substantial illegal purpose. It's a bit vague, could change who qualifies significantly.
Okay. Lots to track there. Let's move over to finance again and innovation, stability, that sort of thing. How are the banks looking? Stress tests came out,
They
right?
did, and the headline is good. All 22 major U.S. banks passed the Fed's annual stress tests.
Meaning they could handle a big crisis.
Theoretically, yes. The simulation involved like 10% unemployment, a 33% drop in home prices, 50% stock market crash, and the banks absorbed $550 billion in pretend losses and were still standing.
Sounds pretty solid.
It does, but there's always a but, right? The 2025 test was apparently less vigorous than last year's, and significantly, the Fed didn't really push hard on testing exposure to private equity or private credit.
Private credit, that's been growing like crazy, hasn't it?
Exactly. It's like a $2 trillion asset class now. And the Federal Reserve Bank of Boston itself warned it could pose a systemic risk down the line.
So the stress test didn't really stress that part.
Not heavily, no. The Fed said previous tests showed unintended volatility, whatever that means, and they'll seek public comment on changes. So maybe they know the tests need updating for these newer risks. Definitely something to watch.
Yeah, absolutely. Okay, sticking with investing. Crypto. Rick Edelman, big-name financial advisor, made a pretty bold call.
Huge call. He's now saying investors should consider putting 10 to 40% of their portfolio into crypto, like Bitcoin.
Whoa, 40%. That's way up from his old advice.
Massively up. He used to suggest maybe low single digits. Now he's saying the classic 60-40 stocks and bonds model is basically outdated because people are living longer.
So more growth needed,
Mm-hmm.
more equities in crypto.
That's his argument. He sees crypto having uncorrelated returns, high potential, basically challenging the whole foundation of traditional portfolio advice. It's a big deal coming from him.
Yeah, no kidding. And does that fit with what we're seeing generally with crypto adoption?
It does seem to. Bitcoin ETFs, billions flowing in this year. That's a clear sign it's going more mainstream.
Right.
And you hear other things like a Trump housing advisor talking about maybe counting crypto as an asset for federal mortgages. The Senate's trying to get a crypto market structure bill done by September.
So more integration into the normal financial system?
Yeah, and look at Coinbase again. They're not just a trading platform anymore. They're doing crypto-backed credit cards with Amex, stable coin payment services with Shopify. Even JP Morgan launched a deposit token on Coinbase's own blockchain, Base. The lines are definitely blurring.
Okay, but integration is one thing. What about the risks? Security still seems like a huge issue in crypto.
Oh, massive. Over $2.1 billion stolen in crypto hacks just in the first half of this year.
$2 billion.
Yeah.
Wow.
Yeah, a new record. And mostly from attacks on the core infrastructure, the bridges between blockchains, the exchanges themselves. It shows that while it's maturing, the risks are still very real.
And is Coinbase itself doing okay despite the stock surge? Any concerns there?
Well, one thing analysts point to is that trading volume on their platform has actually been trending lower since April. If that continues, it could definitely hit their revenues, even with the other services growing.
Gotcha. Okay, shifting tech gears. Autonomous vehicles, robo-taxis versus Uber and Lyft.
Yeah, big potential disruption there. Canaccord Genuity actually downgraded both Uber and Lyft.
Really? Why?
They basically question if the ride-hailing companies can survive what they called the existential threat from robo-taxis.
Existential threat. Strong words.
Very. Meanwhile, Tesla stock was up this week after they launched their robo-taxi service in Austin, so the battle lines are being drawn.
Fascinating. And another big tech trend, AI's massive power needs.
Huge issue. Power company stocks actually got a boost on reports President Trump might sign executive orders to help increase power supply for AI.
Like how?
Things like making it easier for power plants to connect to the grid, maybe using federal land for data centers. It just highlights the enormous infrastructure challenge AI presents.
Yeah, you don't really think about plugging in AI, but...
It needs juice. Lots of it. And speaking of infrastructure, there's that CoreWeave story.
Right, the NVIDIA-backed cloud company bidding for Core Scientific, the Bitcoin miner.
Exactly. Analysts see that as CoreWeave trying to lock down power and physical space for its own AI cloud services. Core Scientific is already their biggest tenant, so it makes sense.
So AI cloud needing Bitcoin mining facilities for power and space,
Yeah.
The connections are wild.
They really are. It's all converging. Unfortunately, with all this tech, the security threats just keep coming. WestJet and Hawaiian Airlines both got hit by cyber attacks this week.
Oh, man. Airlines, too.
Yeah. And cybersecurity firms are watching a group called Scattered Spider. They're known for using social engineering, tricking employees to get access and install ransomware. Apparently, they're targeting aviation now.
That's scary, hitting critical infrastructure like that.
Definitely a reminder of the vulnerabilities.
Okay, let's broaden out again.
Yeah.
Social trends, political stuff. Heard about this revenge-saving idea.
Yeah, it's interesting. After the revenge spending splurge post-pandemic, now people seem to be swinging the other way.
Why? Just worried.
Seems like it worries about tariffs, inflation sticking around, maybe job security. The personal saving rate actually ticked up to 4.5% in May.
Not bad.
And a Vanguard survey found over 70% of Americans plan to focus on emergency savings this summer. You know, building up that cushion, advisors always say 3-6 months of expenses.
So people getting more cautious with their money again.
It looks that way. A real shift in mindset from just a year or two ago. What does that mean for growth going forward, you know?
Good question. And then, on the complete opposite end of the spending spectrum, Jeff Bezos' wedding in Venice.
Right. The $50 million 3-day extravaganza.
With every celebrity imaginable.
Bill Gates, Oprah, Leo DiCaprio, Ivanka Trump, the Kardashians.
Yeah.
And it didn't exactly go unnoticed by the locals, did it?
Oh, protests.
Yes, citywide protests from locals, environmental groups, basically saying, really, this kind of excess in a fragile UNESCO site that's already struggling with over-tourism.
Yeah, talk about contrast with revenge saving. It really highlights those tensions about wealth and, public space.
Absolutely. A very visible flashpoint.
Okay, staying with headlines. New York City mayoral race. The frontrunner is now a Democratic socialist.
Zoran Mamdani, yeah. Won the primary, and his platform, $30 minimum wage, higher corporate taxes, rent freezes, free buses, city-owned grocery stores. It's definitely sparked debate.
I bet. Billionaire Bill Ackman called it disastrous.
He did. And President Trump weighed in, too, called Mamdani a communist, said New York would become a communistic city. So
Yeah.
Very strong reactions.
Yeah. Raises big questions about urban policy directions. What else on the legal political front? Gavin Newsom suing Fox News.
Yep. California Governor Newsom suing Fox for at least $787 million for defamation. It's over how they reported a phone call he had with President Trump.
$787 million.
Sure.
That's specific. Same number as the Dominion settlement.
Seems like more than a coincidence, doesn't it? He did offer to drop it if they retract and apologize on air.
Interesting. And the Supreme Court made a big ruling on injunctions.
Huge. They limited the power of federal judges to issue universal injunctions.
Okay, remind us what that means.
A universal injunction is when a single judge can block a government policy nationwide, not just for the people suing in that specific case.
Got it. So limiting that power.
Makes it easier for the administration, in this case the Trump administration, to implement executive orders without one judge stopping it everywhere immediately. Like the order aimed at ending birthright citizenship.
Did they rule on the birthright citizenship thing itself?
No, importantly, they didn't touch the constitutionality of that order, just the procedural issue of how judges can block policies. But it's a significant shift in judicial power.
Definitely sounds like it. And finally, the president of the University of Virginia resigned over DEI.
James E. Ryan, yes. He resigned while the Justice Department was investigating UVA's diversity, equity, and inclusion initiatives.
Why did he resign?
Reports say the DOJ actually demanded his resignation as part of resolving the investigation. They accused the school of not fully dismantling DEI programs as required.
Wow. So direct federal pressure on university leadership over DEI.
Yeah, it really underscores the intense political and legal battles being fought over DEI in public institutions right now.
Okay, wow. We've covered a ton of ground today. I mean, from the stock market highs and that tech boom to trade wars hitting prices.
Yeah, then shifts in Fed policy, the whole roller coaster of crypto, banks passing stress tests, but maybe not the stress test.
Right. And then how people are saving more, the controversies around extreme wealth, city politics, Supreme Court rulings, university presidents. It's a lot.
It really is. And what stands out, I think, is how interconnected it all is, right?
Totally.
A trade fight impacts inflation, which changes how you save or spend. Bank regulations affect the whole system's health. New tech like AI or robo-taxes, that changes industries, jobs, everything.
Even, celebrity wedding or a local election can kind of tap into these bigger economic and social currents we're seeing.
Exactly.
So as everyone listening thinks about all this, maybe a final thought to chew on. We're seeing this resilience, right, especially in tech, this innovation pushing markets up. How does that square with these other pressures, rising costs, global uncertainty, trade fights? Do they cancel each other out? Does one win?
Yeah. That's the key tension, isn't it? And maybe thinking about what that clash or maybe synergy means for your own strategies, your own
Mm.
finances, how you navigate things, how you understand what's happening, what are the opportunities, and what are the challenges for you in this really dynamic, kind of confusing landscape.